Hey, we are live. We are live
Yes, we
once
are.
again here. Sam, why don't you introduce us this time?
All right. Well, I'm Sam Shukavage, and with me, as always, is David Shukavage, the president and founder of Carolina Retirement Planners. And behind the curtains, making everything come together magically, is the lovely, incomparable Amy Dresky, our director of client fun.
Hello.
And thank you all for joining us here on our the happiest of happies, our happy half hour. We come to you live every Thursday to bring to you some kind of words of wisdom. We try to make them wise about something financial, and we try to make it as fun as possible as well.
Entertainment. It's got to be entertaining, at least a little entertaining.
Mhm.
I don't think we've bored people too much yet. In all the years. So, yeah.
Yeah,
And
coming up on 2 years now.
Amy, what number are we up to now?
We are number 96.
96.
96. 96 weeks we have come to bring you this. We started it, as you may recall, when COVID hit and we couldn't all get together, and we said, hey, let's have a get together on the web and substitute this. So this has been fun. This has been fun.
Yeah.
And
And if you are out there joining us, we would love it if you say hi so we know that you are here because we
yeah,
can't
just
see you.
we can't see you. Tell us what you're drinking, and I am drinking iced tea. I am even just plain old iced tea. I don't even have the fancy herbal tea today. For those of you who don't know, here in Carolina Retirement Planners at 620 Market, we are replacing the AC on the first floor. Now, this is a 102-year-old building, so there's literally a basement underneath us. And they took the old AC unit, which was pretty darn old, and used the old Freon, which was leaking and all. So we're going to replace all the ductwork. They're going to put in new ducts, do all this stuff. But boy, it is a little warm on this first floor with no air conditioning.
I know you look a little flushed, just a little,
Little,
but
I
you're looking
look,
good though. You're looking good.
now Sam and her hubby made this possible, and me not having to come from home, because they brought in this little window unit, and we put it in our window and blown it in and got fans moving it around, and it is actually bearable, even though I don't know, it's 90 something out there. But
I know. Be kind to it. That's my hurricane emergency unit.
we'll get
Don't
it
break
broken in
it.
for you.
Yeah.
Get it broken in for you.
Yeah.
So, however, the second floor is still going fine, and Kristen and Jameson are up there slaving away in the air conditioning. If you come here and I'm not here and the doors closed, there's a little sign that says call us, because if we're not downstairs, we keep the door closed just for security purposes. But just fun. I can't wait till they get that in. So
Yeah, it's
uh,
gonna be nice. We also, I don't know if you mentioned this, but we're putting in a fresh air ventilation system that's gonna keep all this like fresh air moving through the building, and a dehumidifier, I think, is a part of it, and an eye wave where it's gonna like kill bacteria in the air too. Uh,
Wow.
I kind of think of it
Yeah.
I don't know what it actually is like, but I think of it like a bug zapper. There's like bacteria comes in, it's just like zap, zap, zap.
really
So
tiny, tiny, tiny little bug zappers,
I think,
It
of it
sounds
like a
like
bug
space
zapper.
age and fancy. I'm excited.
So coming into our office will be hopefully a really well, we like to think it was always a lovely experience, but will hopefully be very just, you'll be breathing
Well,
just like lovely, fresh,
if you ever
beautiful
come
air.
and want to tour the base work, we can arrange that. But it's a nice basement, but it is a 102-year-old basement.
Oh,
So we
our
get all
basement
the air
looks,
of the
our
basement
basement
down there.
the basement looks like it came from a horror movie. Like, I think that if some of the Wilmington film community, like the Conjuring series, wanted to film an episode or a movie in our basement, they wouldn't have to do much set dressing.
That's like
Yeah,
my daughter's basement is the same way. Her house was built, I think, in like 1941 or something like that. And you don't think basements in this area, but man, they're creepy around here. You're like, whoa. Yeah, scary.
I have one in my home on Second Street. That one goes back to 1850. We still have the coal chute and what probably was either a downstairs kitchen. There used to be a spiral stairs up that's been blocked, but the stairs are still there. But it either had a kitchen or maybe a servant's quarters down there. It's just crazy, you know. That basement's pretty classic too. But this one's got like all these phone lines because they had how many businesses in this in the last 102 years. So there's just phone lines all cut, you know, stuff. Anyway, but we need to think about getting on with our little, what are we talking about today, Sam? Do you recall?
Oh, I know what we're talking about today, but there is just one last quick tradition.
Oh yeah.
With just one last very quick tradition before we move forward. I know that we just always talk about what day it is. And Amy, because I know it's a kind of a cute day today.
Well, it is. It's National Bubba Day. So it's given for like a nickname, I guess, of like a brother or something, but they also did it as, you know, just find some nicknames in terms of endearment and pet names or things that people called you. So that was my little thing for this week. I mean, there's a lot of days, but that was the funny one that I picked for today. So happy National Bubba Day.
Amy, what are your pet names, your favorite pet names that people call you?
Well, I didn't really think about a favorite one, but the one that I kind of told some people about when I was younger in grade school, kids called me AIM, as in like AIM toothpaste, because I had really big teeth. See, so they're great now. I
got a lovely
they're huge,
smile.
yeah. Well, that's because, you know, that's my parents, like my mom. Thank you, Mom. Thanks. Yeah, braces, they work with that. But I was like, man, yeah. So AIM as a name, I was like, oh, I hated it. My dad called me Coconut, but you know. All right, well, you guys, I'm go back over
For
here.
some reason, I can't fathom when I was in high school, they called me Professor. That's the only name I had.
Oh,
Nice, I like it.
Listen, Teresa is with us, Bill, Kim, we have a lot of folks today. Randy, it's good to see you here. Our own Kristen is here. Wanda is here. Mary, our own Mary is here. Let's see. Wanda and Tom are both here. Brad is here. Barb, I assume you're there. Barb and Dan are here. I guess they were actually down. They came down from the mountains a week or two ago, and we had a chance to meet in the office when the AC was working. Lynn, it's great to see you. Who else we got?
we got Kathleen. Hey, Kathleen, and Mary, who's enjoying a nice vitamin water zero. And Martha. Hey, Martha, happy Thursday to you too. And Jacqueline and Darlene enjoying this humid day as well. I know that she's not enjoying the humidity. We talked about that. And hey, Brenda and Paul, we're happy to see you here too. And Debbie and Jean are here. And Phil, hey, Phil. And the Terrors are here. Hey, guys. And Gail, hey, Gail. And ooh, it is, we did not know that today is also leave work early day.
No, nobody does that.
I know that's there's probably
I
a
knew that was the
reason.
day. I was like, I'm not.
He's
like, I'm not
telling.
Okay. Well, you know, we got a crowd have come for something, so I better get the show on the road.
All right.
This is going to be sort of a fun, lighthearted look at some things. You know, as you are probably aware, it's been an interesting 6 months in the stock market and the bond market, and kind of might be fun to look at, say, last year, how did these stock market various parts do? How did it do this year? If we put them together, how we did, just to kind of get it into perspective. We often don't kind of look back maybe as far as we should. And then we're going to look forward. And I've actually pulled some experts' opinions on whether we're going to have a recession or not, and we're going to cover that too. So I hope this is enjoyable. Well, we're going to start with the S&P 500. Now, Sam, what is the S&P 500? What is it?
It's an index with the top 500 largest companies in the US.
Yeah, it's kind of like the Dow, but bigger and better, and this is what it did in 2021 from January to December, the whole year. And if we look here and you were to blow this up, you would see that it did about plus 27%. Man, that was a great year. Well, you were in that, you made 27% that year. But then we come to 2022. And this is year to date. And this is year to date as of like yesterday. And from January right through June 1st. And that year it was down 14%. So we had a year where it was 27% up, 14% down. Now, if you remember the math, if you go up 50%, if you go down 50%, you got to go up 100% to make it. It doesn't match up exactly. But what I thought might be fun to do is to say, this is what it is from January of 21 to now. See, it's about 18 months. If we put them together, and you can see it's up about 9%. So if you say, well, how did I do if you were in the stock market? You're up about 9% in the last 18 months. Even with the terrible year we have, you're still a decent amount up. Okay, so got to keep that in perspective sometimes. At least parts of the market, they have gone down, but they're still kind of ahead of where they were in the last 18 months. Now, Sam, when people invest in the market, they don't just invest in stocks. What else do most people buy some of?
Well, based on the graph in front of me, I think that you're asking me to say bonds.
Bonds. Good. This is
Sam. Good job.
This is the U.S. aggregate bond ETF, and it's kind of a good picture of the overall bond market. And what makes bonds go up and down?
Interest rates is one of the driving forces. Yeah.
And if interest rates go up, what happens to bonds?
They go down.
Yeah, because if the interest rate for a new bond is higher and you want to sell your old bond, you're competing with that higher rate. So you got to cut your price so that your rate gets close or equals the rate on the new bond. So if in fact the interest rates fell, your bonds would go up. Well, this again is 2022. And in 2022, the interest rates were down about 3%. It went down about 3%. And this, of course, wake up, David. So I apologize. This is 2021. This is the full year 2021. And this is the 6 months in 2022. And gosh, if we look at 2022, it fell about 10%. So it was down 3% last year. It's down 10% so far year to date. And if we put them together, we see that we've lost about 13% in bonds. So, but hey, Sam, over that same 18 months, the S&P 500, the stocks, how much did they go up?
Oh gosh, I think you said what, 9%?
9%. So the stocks were up 9%, but over that time, bonds were down 13%. So, you could see simplistically, if you had a 50-50 mix of stocks and bonds over this last 18 months, you'd be down, 4% or so. You'd still be down. In fact, a lot of people, conservative in portfolios, will actually have, 60% or more bonds. They'll have more bonds than stocks. And you can see that they have taken a hit on the bond side. Now, one thing we did is for folks that had a lot of money in bonds because they were conservative, we moved the bonds to shorter term bonds so that they're less sensitive to that interest rate. The shorter the bond term, the less the less it goes up and down with interest rates. So we did that as a protection. Let me just stop and say one other thing. For those of you out here, a lot of folks have, have bond, 60, 75% in bonds. This might be a good time to think about maybe stepping up the percentage and moving a bigger percentage into stocks. Arguably, we are kind of at a low point. Bonds are going to not do well in the next few bits. So it might pay to up the amount you have in stocks with the idea that there's probably going to go up. And then when things even out a bit, we could move more back into bonds when rates have gone up and things have evened. So if that's of an interest, let me know. We can tweak it. And I think that could be smart even for a conservative investor. Always stand the chance that stocks are going to fall way more. But, if they don't, which they probably won't, that could be a smart thing. Okay, so there's a little lesson from the stocks and bonds. Okay, you've all heard the NASDAQ. The NASDAQ is another index like the S&P, except it's bigger. It's got the S&P in there and the Dow in there and a whole bunch of other things. And interestingly enough, NASDAQ is an acronym for the National Association of Security Dealers and Automated Quotations. So next time you're at a barbecue and you want to bore your friends, as I often have the tendency to do, you can show them what NASDAQ stands for. But if you look at NASDAQ, which is again a little more, even more ups and downs, more volatile than the S&P, it was up 22% last year, and this year in 2022 it's down 22%. So it went up 22, it went down 22, and what happened there? Oh, sorry. Overall, it's down about 5%. If you look at how it all netted out, it lost about 5%. So again, it's some stocks, they're going to go up and down more than others and take bigger hits in different times. But that's what the NASDAQ did. I'm gonna do, I think, one more stock, because I don't want to go into every darn stock index going, but a lot of people know that computers, technical stocks go up and down. Sam, do you remember what QQQ is?
Isn't it about, a group of 100 big tech companies?
Right, it's 100. Actually, I think right now it's 102. It's actually 100 companies out of the NASDAQ, and they're mostly big tech. And they call it the QQQ 100, but officially right now it's got 102. So you can think of this as, I was going to use FANG, but I couldn't find an index just for FANG, which is what's FANG stand for again? Facebook, Apple, Netscape, and Google. Those big stocks drove the market
Netflix.
Up and down. But Netflix, not net. Yeah, so they drive the market up and down. But this is pretty good. This is kind of the big companies. It's weighted by the size of the company. Man, in 2021, it did plus 26%. Had a really good year. Feel good about going up 26%.
That's pretty great.
This year, it fell minus 21%. So it was up 20. And if you say, what did it do one end to the other, it actually came out to be 0.14%, or basically zero. Like up till the last 18 months, it netted out to nothing. So if you were invested in this, though you felt good when it was way up, you didn't feel so good when it, right now, but at least it's even. Now, one more we got to talk about. If you're on the TV at night, you're watching the show, there's commercials come on that tell you something you got to buy because it's going to do real well and it's going to protect you if you have a big drop and all that stuff. What is that thing?
Gold.
Gold, right. We got to buy gold. Gold's the savior. You listen to those commercials. So this is GLD, which is a gold ETF that kind of represents what gold price has been doing. Last year it fell 4.4%. And do I have that right? Yeah, last year it fell 4.4. This year it's up 2. And overall, again, it's made 0.6%, or basically zero. So gold, you would think this miracle investment that saves you when the market fell, all it did would have done better than, +2. But just a lesson there for gold. Gold is, over the long run, the best gold does is keep pace with inflation. But I think we covered that in an earlier happy half hour. So here's some little things about the market. I thought it'd be fun to kind of look at how things have done, different pieces. Now, are we going to have a recession? Is that real close? And I'm not an expert on recessions, but I went and I read this report from a company called First Trust. First Trust have a lot of ETFs and investments. They're pretty good at it. And they put out, every Monday, they put out a great little thing. And on May 16th, they did one where they think a recession is unlikely. I read it so you don't, but I'm going to summarize the 5 reasons they think that it's not going to happen. One is money. It's not tight. Yeah, we've increased the interest rates some, but compared to where it's been in the past and compared to the money, they don't think that's a big deal. We also are talking about quantitative tightening. We pumped money into the market when COVID came and all, and now we got to start taking it out. We've been talking about it, but we haven't done it yet. So they don't think the money is going to affect it. Tax rates are the same. In the Build Back Better, there was a Build Back Better bill about a year ago where they were going to basically increase taxes for millionaires and billionaires to help pay for everything. And that didn't come about. So taxes haven't really gone up, are unlikely to go up until at least 2026 when the Tax Cuts and Jobs Act sunsets, and there's just everything goes up a few percent. We talk about that. That's why you should convert to Roth now before that happens. But they're the same, at least in the near future. Inventories. Everybody, manufacturers, retailers, all these people have inventories of goods that they have to maintain for their sales. Inventories right now are still low. They don't have enough stuff. And so for the next year or so, we're going to be cranking out the manufacturing to replace those inventories like baby formula, so that we have enough for the things we need. So that's a good sign. People are going to be buying to replace their inventories. Houses. Now, the last year or so, you couldn't buy a house. I mean, they evaporate. Higher mortgage rates are going to affect that some. But for years, the industry's been underbuilding. And I don't have the numbers here, but there's still like millions of houses short of what we need to have, much less rental properties. So they think, it's going to slow a bit, but the builders and house sales are still going to be, although not crazy, they're going to be healthy. And finally, we have jobs. We've got openings for 11 million jobs. I think before COVID, there were 7. We got lots of work and not enough people to fill it. So these are the reasons they think we're not going to see a recession in the near future. They're thinking out 2023 or beyond, who knows, but at least I thought I'd pass this on. And there are some other good news. The gross domestic product was up 3.6 over last year. That's a healthy growth. Retail sales jumped 29% versus February of 2020. And if you look at 2020 and you go back 26 months, it only went up 6.7. So our sales are up and very healthy. And unemployment, again, is really low, 3.6%. You got to go back like 52 years or something to 1969. And I don't know, 1969, I might have been delivering papers or something, but that was the last time they had this many jobs or this so little unemployment. So these are good things. Some good news in terms, do you think there's going to be, are we on the cusp of a recession? Probably not. Most of the big drops and the ones that really hurt are like 2018, where there was a bubble and we had all those mortgage security stuff that was crazy. And in 2000, we had a crazy increase in the price of technical companies. 2008, that was the stock market. We don't have any of those big lurking ucks. It's just the normal ups and downs we have. I mean, the market goes up till it's a little too high, then it comes down, and then it goes up again, and it just keeps working its way up. So I don't see a reason to flee. I've only had a couple people that say, "Oh, get me out of the market. I don't want to get out." But the trouble is, you don't know when to get back in. And so historically, people have lost by fleeing the market. All indications are we're just doing what we should do, stay the course. Most of our clients have an offense and a defense. We got some of the money protected, so this all won't affect it. The money that's out there, we'll just let it do its thing. It will come back. That's been history. That's what I know. Again, if you would like to have some questions or talk more, this is the phone number of our office. Call and say, "Hey, Jessica, set us up with a phone call or a Zoom call or a visit." And if you want to learn more, there's a lot of good stuff at our CarolinaRetirementPlanners.com. And under events, the little tab, if you go down from it, there's a list of all the 90 some happy half hours we've done. Boy, we're bumping up against the top of the hour, but I've timed it just right. So what's next, Sam?
All right. Next is our wine drawing. And to get your name in my bucket, or well, I guess every week we raffle off 2 bottles of wine delivered directly to your door from Fermental Bottle Shop. And to get your name in my jar, all you have to do is we'll put out a little ad on Facebook or a little event, and you just click it to say that you are attending each week, and that will get you entered in. If you are on our email list, then we will send out an email each week letting you know what our topic is. And if you respond to that email, we will get you entered into our wine drawing. And if you share either the Facebook event or the email with a friend, we will get you some additional entries into our drawing, into the raffle.
So what you're saying is that we just like to give away wine. Is that
We like to
we
give
make
away
it very
wine.
easy? Yeah. I
Yes,
like it.
make it easy to give away wine. And if you are not on our email list and you would like to get on our email list, just shoot us an email and we'll get you on there. Or, oh gosh.
Go to Carolina Retirement Planners. You'll find our email.
Yeah.
Tell your friends to
Yeah.
come watch us and get
It's
in
in
their
the chat.
email list, you know.
Yeah.
And I'll tell you in a minute what next week is.
Awesome. All right. And our winner today of 2 bottles of wine delivered directly to their door is
Drum roll.
Linda W.
Linda
So-
W.
Congratulations.
Linda W. So
Yay.
congratulations, Linda. You are our wine winner this week. And so yay. And for those of you who did not win, please continue to enter. We love to give away wine and we will continue to do so just as long as you keep on entering.
And a shout out to Wanda and Ann, who may have joined us since we had a chance. I can't remember. Thank everyone. Next week, I'm going to do something on the board behind me live that I've not done, I think, ever on Happy Half Hour. It's a fun explanation of the 4 phases of life. And most of you are in phase 3 or 4. If you're in 3, you're probably getting real close to 4, and how that all works and what you worry about and the things you got to take care of. It's a fun it's a little fun explanation.
Hmm.
I hope you will enjoy it. I hope I'll remember it all, and it'll be fun. So we'll do a board one next week. That'll be kind of a nice little bit entertaining, and then we'll see what we got coming up. I think well, we'll see that then. Okay, well, it is 5 o'clock, so our happy half hour is kept. We try to keep it at half an hour, and
Yeah. Thanks, everyone. Have a
Thank you all
wonderful
for joining
weekend.
us.
Yeah. Cheers.
Yeah,
We'll see you next week.
see you next week. Bye bye.
Bye.